I'm Julia Charlton, the current chair of the Commonwealth Chamber, and I'd like to thank you all for joining the Commonwealth Chamber of Commerce's webinar today on Singapore's rise as a leading Commonwealth Crypto Finance Hub. Not only is Singapore a leading jurisdiction in the global cryptocurrency economy within the Commonwealth, but it's also considered a natural home of cryptocurrency in Asia. Along with fellow Commonwealth member state Malaysia, Singapore was amongst one of the first countries in Southeast Asia to adopt digital currency, dating back to February 2014 when it established its first BitCoin ATM. Within 7 years, Singaporean citizens had the sixth highest rate of cryptocurrency adoption, with 15.6% of surveyed adults owning cryptocurrencies, according to Finder.com. Singaporean citizens rank first in Ethereum ownership across the world and rank third in global ownership of Bitcoin. I wonder how they feel about the drop from around 66,800, I think, US dollar high to around 22,800 at the moment, the Bitcoin price at the moment. The nation was deemed the most crypto-friendly nation by Coincub in 2021 due to its, quote, robust economy, positive legislative environment and high rate of cryptocurrency adoption, unquote. The perception is being created, but it's somewhat perhaps in doubt due to the ongoing regulatory reforms under the MAS's, the Monetary Authority of Singapore's, guidelines on the provision of digital payment tokens. This imposes stricter regulation and a more selective regime towards cryptocurrency, most particularly for retail investors, which made many assume that it may be rowing back somewhat from its objective of becoming a global crypto hub. However, many have come to gradually realize it can be argued that Singapore is just taking its time to implement well thought out and protective policies that ensure that the citizens don't invest in high risk enterprises. So to discuss in detail both the historical context and rationale towards Singapore's policy frameworks and its navigation towards regulation and gradual adoption of cryptocurrency, as well as the future trajectory of Singapore in the regulatory space as a leading Commonwealth nation in the decentralized digital economy, I'm absolutely delighted and honored to welcome our speaker today, Chris Holland, partner of the Singapore-based full-service compliance consulting firm, Holland & Marie. Chris has been a lawyer for many years. I knew him when he was a corporate lawyer back in Hong Kong many years ago. So he's got an amazingly strong background to be advising on crypto compliance. Chris, over to you. We're going to listen to your presentation before we discuss some of the more detailed aspects of it.
Fantastic, Julia. It's an honor to be included in this. I remember meeting you back in 2006 or something like that. It was a pleasure dealing with you then and great to have reconnected 15 some years later on cryptocurrencies. So this is our presentation, sort of an introduction to the regime here in Singapore and how perhaps Singapore is the leading Commonwealth Crypto Finance Hub. Yep, so this is basically what we will go through today. I'll have a brief introduction, talk about the ICO craze in Singapore. That's how I got into the space a little bit, and also give you some context about how we got to our regulatory position. Talk about the current laws that are in place today or are pending effectiveness that apply to cryptocurrencies. And then talk about some recent developments, both on the MAS's advertising guidelines that restrict advertising in Singapore to the general public, talk about the licensing process for Payment Services Act licenses, and then other market developments that have even gone on into this week. Hopefully most people listening have been to Singapore. I'm a permanent resident of Singapore, have been here basically since 2001, except for a few years in Hong Kong. And Singapore is a great place to live and a great place to operate a business. It's known as having a business-friendly environment, a reasonable regulator, excellent public infrastructure. I'm a fan of warm weather all year round, great new condos and stuff that usually have a pool. Businesses are more focused on the tax rates than the pool, but either one. It's known for social and political stability, to perhaps put it nicely, but that's true. It's very consistent government and responsible. And it's very supportive of fintech. I don't know if you've ever been to the FinTech Festival, but prior to COVID, it was quite like a 3-day event held at the expo. There were booths, there were parties. It was just the highlight of the year, really, in terms of public events. And then they also have a lot of grants that support businesses that are doing new things in FinTech, whether it's RegTech or helping financial services become more efficient. So in general, Singapore is thought of as a wonderful spot to have a startup and launch a FinTech business. In 2018, that's when I came to the space, and I'm a capital markets lawyer historically. I basically did 11 years of IPOs with Clifford Chance and then worked at an investment bank, and that's how I learned a little bit about compliance. And we were constantly working on IPOs, initial public offerings. So when I opened my own firm and I heard about ICOs, I said, people are spelling it incorrectly. They meant IPOs, but that wasn't true. They were this thing called initial coin offerings. And I said, is it a share of stock? And they said, no. And I said, well, what is it? And I did not understand for the longest time. So I started attending events because there were all these ICOs launching in Singapore. And this graph shows you that Singapore is really the most popular jurisdiction for ICOs in all of these mainstream countries. ICOs were great because they would basically have all these pitch parties, right? Some organizer would say, come to this great hotel, free drinks, free food, and probably 12 different ICOs are going to pitch their project, right? I'm happy to come listen to try to understand their business, understand what the case is, and just learn about the technology generally. And what's amazing is there were a lot of high profile ICOs done during that period, and they're just gone today, 5 years later. There's a company called 10X. They were really big in 2018, raised $43 million in 7 minutes, sadly have ceased operations today. Another company called Trace2.io, they are run by a high profile compliance thought leader in Singapore. He remains a high profile leader in Singapore. And he had an idea about how KYC was going to be done on the blockchain. I know how painful KYC is. I did not believe that it could be solved through the blockchain necessarily, but he believed it, and people got excited just hearing about the idea. Just hearing about tokens could make all the pain of KYC go away. They raised like $12 billion. Still today, it ceased operations in 2019 and couldn't go anywhere. So it was a bit of a crazy era in that you were raising all this money on unproven business ideas, basically a theory of the case about how blockchain was going to change the world. And it was available to retail investors, and lawyers were not vetting the disclosure for quality. Normally, the only thing you would do is get a legal opinion in Singapore that your token was not a capital markets product. And the truth is, even this opinion process is very disorganized. In theory, you might need an opinion in every jurisdiction where you offer the token, right? To make sure you're not selling a security in the United States or anything else. But Singapore was the popular opinion jurisdiction. So even if you had like a Seychelles issuer selling outside Singapore, Singapore was the one legal opinion you would get. So Singapore was probably the #1 country for ICOs back in the day. It was a crazy time. Due to all this craziness, I think everyone could see that there was going to be more regulation, that you had this whole economic industry coming out, and it wasn't covered by any of the existing regulation. Basically, the MAS had concepts for money transfer, money changing, and a stored value facility concept, which was like an e-wallet, but they had no concept for what Bitcoin and Ethereum was. So they ultimately came out with the Payment Services Act, which went into effect in January 2020. And that regulates 7 payment activities. Account issuance is basically having an account by which you can make payments, right? Whether or not anything is there, it's some sort of electronic account that will arrange payments. E-money issuance is having basically an e-wallet that stores fiat. So if you have something on your phone that has a balance, you're basically engaged in e-money issuance. Cross-border money transfer and domestic money transfer are probably what you think. Merchant acquisition involves helping merchants receive payments electronically. Money changing is traditional physical changing of notes. And then you have digital payment token services, which what we really think about on cryptocurrency. So when the MAS created the Payment Services Act, they had identified 4 risks, 4 things they wanted to make sure were protected. The first was loss of customer monies. Now, you may be surprised at that, given all of the implosions we've had in crypto over the last few months. What the MAS would say is, we talked about monies. We did not talk about digital payment tokens. We were talking about fiat balances. So in that point, they were trying to make sure that fiat funds were safeguarded. Then they're very worried about money laundering risks and terrorist financing risks relating to cryptocurrency. Even though I think you can argue it on a technology basis, they believe that it was used rampantly by bad actors, so they were focused on that. They worried about fragmentation and lack of interoperability across solutions. That's as much fiat-based as it is cryptocurrency. And they worried about general cyber attacks, hacking of wallets, things like that. So the Payment Services Act was designed with these 4 priorities in mind. So what is a digital payment token? Basically, all your traditional cryptocurrencies that are listed on an exchange, those fall within digital payment tokens. So things like BitCoin, Ethereum, Polkadot, Luna was a digital payment token, etc. Stable coins, which are pegged to a currency, I'd say for 2 years were considered to be e-money, because basically they're supposed to be pegged to a currency, and whether it's a fiat, the true representation of fiat on your phone, or something that has a peg, the lawyers generally thought that was e-money. But some people didn't like the way that really worked out and differentiated between Bitcoin versus something like Tether or USDC. And the MAS earlier came out this year saying that from their perspective, stable coins were generally a digital payment token. And so by and large, the law firms have adjusted their theory of the case, even though the text of the law hasn't changed. And most of the industry, perhaps not 100%, but I'd say 98, 99% now treat stable coins as digital payment tokens. You still do have utility tokens, and you have things called like limited purpose e-money or limited purpose digital payment tokens. So in-game assets or other things that are really within a closed loop will not fall within the Payment Services Act. But otherwise, all the mainstream tokens you should think about as digital payment tokens. So the 2 regulated activities today under digital payment services, token services, are dealing in digital payment tokens, which is basically buying and selling, usually as an OTC desk, whether you're acting as principal or as agent, or facilitating the exchange of digital payment tokens. And that's really any traditional exchange, although there is a bit of a nuance that we'll get to later about whether you come into possession or not of these intangible assets. The Payment Services Act has a lot of different requirements depending on your business model. I'd say the 2 biggest ones were, one, you had to be in compliance with the travel rule. So all the businesses were exempt and remain exempt till they get their license. But in order to have a license, you had to be able to communicate the buyer and seller information, what's called the travel rule. And that was something not traditionally done in the cryptocurrency space, and people thought it was almost impossible. But the solutions have come into the market, and that has been a sticking point for license applicants for a number of years, but basically that's changing. The MAS requires a lot of due diligence on hosted wallets. So if your wallet is not supported by a financial institution and it's just a private wallet, MAS says, great, we're going to make the digital payment token service provider do enhanced due diligence to make sure you own that wallet, you control it, and it's not by a bad actor. The other thing is that foreign businesses that wanted to set up in Singapore, that's great. The CEO of the Singapore entity has to be based in Singapore. So they were basically creating a structure a little bit like banks. You can have a global headquarters somewhere else, but the regulated activity done in Singapore has to have a board of directors that's in charge of it in Singapore, and the CEO has to be based in Singapore. So that was the Payment Services Act. And what happened was any business that was in operation by January 2020 and notified the MAS would be exempt, and they could continue on with their business until their license was obtained or revoked, or they withdrew the application. Then in January 2021, the MAS passed the Payment Services Amendment Act. And basically that added additional activities to the Payment Services Act, aligned with what the Financial Action Task Force was doing. Basically, the Financial Action Task Force said the risks in cryptocurrency go beyond what we identified originally as dealing and facilitating the exchange. And so they have added new regulated activities. So just facilitating the movement of a token from one account to another, or providing custodial services, or facilitating the exchange where you don't technically come into possession. All of those things are going to be regulated under the Payment Services Act. So you say, okay, that was passed in January 2021. When did that become effective? How has that changed the landscape? It's still not in effect yet. And we actually do not know when it's going to go into effect. People say by the end of this year. They also said that in July 2021. So we will see when that gets approved. But there, frankly, are still a number of questions about how some of these new activities are going to be interpreted. So then, beyond the Amendment Act, the MAS recently passed the Financial Services and Markets Act, and that covered a lot of different areas, not just cryptocurrency, but the main thing it did with respect to cryptocurrency was regulate businesses that were conducted outside Singapore. So the MAS believes that some businesses have avoided regulation under the Payment Services Act by saying, hey, we have no Singapore customers, right? We don't have an office here. We just have the entity that completely services non-Singaporeans. So the MAS felt like that was a loophole, and they think that all the countries are going to be basically making sure it's entirely covered. So this act now covers companies that are incorporated in Singapore, but only do business outside Singapore. Now, what is the test of doing business in Singapore versus outside Singapore? The MAS has not gone into detail on that. Definitely, if you have a physical office here, I think you'll be deemed to be doing business in Singapore, and I'd say Singapore customers. In general, I would have told people, look, if you incorporate in Singapore, that's enough. But we're still figuring out, and basically the MAS still has to articulate what the difference is. So if you're thinking about relying on that you're outside, you're operating outside Singapore and don't need regulation, it's probably advisable to get some advice before you start. The other question would be, okay, when does that become effective? That passed in April. Is there a timeline? No, there is not. We don't know when that is going into effect. So what has happened since the Payment Services Amendment Act and last year, toward the end of the year, you'll remember the Super Bowl, crypto prices were flying, things were good. And here's what I probably like the FTX ad with Larry David better, but FTX does not have a licensed presence here, while it's crypto.com does. So you probably all remember the advertisement, Fortune favors the brave. I'm pretty sure the MAS saw it, because quickly thereafter, the MAS said, we're shutting all this down. And so the MAS felt that these advertisements were inappropriately encouraging retail investors to buy cryptocurrencies, which they thought was not suitable for the general public and highly risky. So without any consultation, they launched these advertising guidelines where they've said, look, DPD service providers are generally not allowed to market their services in public areas or in Singapore, or promote their services through influencers or things like that. And the theory, this was not a conduct regulation that was published, it's a fit and proper requirement. So basically the MAS is saying that we don't think the licensee would be fit and proper to do business in Singapore if they think that it's fine to mass market their business relating to cryptocurrency. So that is the hook that the MAS used to put out these guidelines. And you can imagine poor crypto.com paid Matt Damon all that money, was very proud of putting it on the side of buildings, on buses and everything else. And basically overnight you had to take it all down. So that was a big shift in the market, because we all knew that the MAS was taking a long time with licenses, but we did not know that the MAS had a huge aversion and thought it was inappropriate to do public advertising. So that was a big deal in January. So let's talk about licensing. And we talked about the Payment Services Act, and it went into effect in January. By February, you had to tell the MAS you were planning to submit a license application, and that license application had to go in by July 2020. So I think probably over 200 Payment Services Act, cryptocurrency applications went in, and then a bunch of other e-money businesses. Maybe they only did fiat-based wallets or money transfer. They didn't touch cryptocurrency. Those would go in for July for cryptocurrency only, and by January 2021, if you only did e-money services. And the MAS received over 580 applications during that period, over which 415 were grandfathered. So that was a lot of applications, and I think more than the MAS was expecting, which has caused part of the reason that caused a very slow processing time. So the MAS has said, as of 4 April, 87 applications have been approved, but that's not all cryptocurrency. There's a lot of money transfer businesses that are included in that statistic as well. So as of today, there are still less than 15 DPT service providers that have received their license or approval in principle. It's a pretty big deal when anybody gets approval in principle in Singapore. It's the news around town. So DBS Vickers, DBS is a huge bank here in Singapore. They got a license, even though they were not one of the exempt entities. Independent Reserve, an Australian-based exchange, CoinHako, a local one. Those are some of the ones who got their licenses. Some of the bigger ones that got in principle approval are Crypto.com, Luno, Revolut, all recently got in principle approval. And that means that subject to meeting certain final conditions put by the MAS, they will get their license probably within 6 months. So the MAS will set out, however many conditions that the candidate needs to meet. There are still several big players pending. So basically, someone like Gemini or Coinbase has now been in almost 2 years, if not more, and they have not had their license application approved, even on an in-principle basis. So 2 years, they can feel like it's going well. They can feel like, hey, if the MAS was going to say no, we know something right now. But there isn't a specific timeline to saying yes. So the journey to getting licensed continues to be a long one. And I often tell new people who think about, hey, Chris, how long would it take to get a license? And I say, well, I would budget at least 2 years, because there are people in for 2 years that don't even have approval in principle yet. So I'd say that is weighing on the overall environment here because it's taken such a long time. One big player that withdrew is Binance. So they were originally an exempt entity, and they were a high profile applicant, and they ended up going on the investor alert list. So the global business went on the MAS investor alert list because the MAS felt that there was confusion about Binance being regulated. And then the Singapore entity, as part of that, withdrew its application and said, look, this is not going to work, so we withdraw. The Binance global business is still listed on the investor alert list and currently does not accept Singapore residents. So market developments. So in all that, we were just already focused like, wow, these licenses are taking a long time. And wow, the advertising guidelines, what are we going to do about those? They seem, not friendly to the industry. And then over the last few months and even days, there have been other big Singapore news. One was the crash of Luna. Luna was a very popular token, one of the best performing tokens during the first half of the year until it completely crashed. And the Luna Foundation Guard, which is their nonprofit that basically issued the token, they were a Singapore-based platform. So that definitely, threw a dent in the reputation of Singapore. It was not regulated under the Payment Services Act. It did not need to be just for issuing that token at the time, but it did affect the overall environment for crypto businesses in Singapore, as did a fund management company called Three Arrows. So Three Arrows was one of the leading digital asset fund managers in over 2020, 2021, really well known, highly thought of. And basically earlier this year, they announced, look, we are really struggling in Singapore. We don't find it a conducive environment. We're going to relocate our fund to Dubai. And so they have still registered with the MAS, but I think they shifted all their funds under management to a different entity. However, as most of you will have seen in the news, they have now filed for insolvency. And even though it may not be the Singapore entity that filed for insolvency, the management practices that occurred the last 2 years were all done by that Singapore entity where they were regulated. So that has also influenced, okay, what is the MAS going to think about funds that want to manage crypto assets? What additional regulation do they need? And then over the last weeks and days, there have been new interviews with MAS officers. So Ravi Menon did an interview probably a month ago where he talked about, they want to create a very responsible global crypto hub. This was a relatively positive statement, emphasizing the need to have strong management capabilities and a fit and proper board. Then a different officer within the MAS said, look, Singapore is going to be brutal and unrelentingly hard on bad behavior in the crypto industry, and said we've enforced a painfully slow and extremely draconian due diligence process. I don't normally think of regulators talking about the licensing process as painful or draconian. I'm looking usually as more of a neutral umpire, but this is clear messaging that we have to see from the regulators, right? This is what they're telling people. So that again goes to people who say, Chris, how long is it going to take to get the license? If I'm a good actor, it's going to go quickly. I don't think so. The MAS is looking at creating a really hard process to vet people out. So that's just where we are. And then the MAS just 2 days ago, I guess, 2 or 3 days ago, released its annual report, including the following observations on the crypto sector. Basically, they talked about how the industry is still evolving and regulation is catching up to industry trends, and that Singapore is being seen as the forefront, but we're still figuring out all the risks involved. And you can even skip to this was where they talked about Singapore being inappropriate for retail. With all the prices down, they wanted to remind everyone that they've been warning people for 5 years that crypto is risky. And so what they did towards the end of this was say, hey, next month, we're going to organize a seminar to share our strategies to develop Singapore as a digital asset hub and explain our position on cryptocurrencies, stablecoins, blockchains, their risks and opportunities, shortcomings and potential. And so, we're still digesting. That came out 3 days ago. What does that mean? Because I had thought the Payment Services Act kind of explained their position on what they were trying to do. But even now, the MAS continues to calibrate what they want their message to be and how they want Singapore to be seen by the outside world, by the industry in Singapore, and by the retail public. So overall, it's been a really interesting few years watching the cryptocurrency regulations evolve in Singapore. And it's certainly moving fast these days with the market struggling and new regulation coming in. It does make it an interesting time for lawyers who are advising on this space, because you have to understand the technical law, but also what the MAS is thinking. There you go. And so thank you for listening to all that. And now I look forward to chatting with my friend Julia.
Thanks, Chris. Yeah, that was great. I loved that. Thank you so much. Yes, so if you have a really great operation, it'll be painfully slow, right? And if you're not so great, well, not at all, I guess.
Correct.
Yeah. So is there any visibility when this Green Shoots seminar will be? And will it be online or will it be by invitation only in Singapore? Do we know any about that?
I think historically these Green Shoot seminars have been open for the public to listen in on. So I'm hopeful that is true. That's why it was such big news that there is going to be some new seminar just on crypto. A lot of the Green Shoot seminars are actually about ESG or encouraging the fund management market. So I will definitely let you know and probably share it on LinkedIn when this gets announced, because there's nothing like hearing it from the MAS itself, right? About what they want to state, what statements they want to make. Yeah. And clearly this is the latest big statement after all this shock to the system has happened. So if this is the MAS's moment to reset its position and kind of recalibrate it, it's going to be a big deal.
Yeah, I think I was in Singapore in 2018 at a crypto conference, and I remember all the excitement then about the Payments Act, because at least Singapore, in all fairness, seems to have constantly tried to sort of grasp the nettle and move forward at various times, which I think some other jurisdictions which have adopted this wait and see approach just haven't done at all. And at least there's been quite a lot of certainty in Singapore, and it has allowed a lot of service providers to have enough certainty to, for example, be able to open bank accounts I mean, is that true? Is that helped everyone with bank accounts, or is it still a difficult thing?
It's still a difficult thing to
Yeah.
get bank accounts. And while some licensees have it, nobody's sharing their banker. You'll ask, how did you do it? That's all top secret information and everything else. So in general, people are like, if you get approval in principle, then you'll probably get it with the bank. But otherwise, it can be very, very hard. And they may just let you have an account only for certain operations and not for all the transfers you want to do.
Yeah.
And it's still a very opaque process that people say, Chris, I mean, it's never anything we give confidence on. It's not impossible, but you cannot be confident.
Yeah. So the 147 withdrawn applications, was there any visibility on what they were or why they were withdrawn, or?
No, I'd say there's no visibility. I've worked on a couple of applications that have withdrawn. Some, their strategy pivoted to where Singapore was not important anymore. Some were encouraged to withdraw because they didn't have enough presence here, or the MAS didn't think they had, enough governance process. I think some have been discouraged about how long it takes, right? And there was just no visibility on when they would get the license.
Yeah. I mean, this sort of painfully slow rhetoric, I mean, that's sort of Basil Fawlty almost, isn't it? Sort of, don't come here, we're painfully slow.
I would feel bad about saying it myself, but if the MAS is going to put out there, apparently it's fine. I mean, that's what it is. It's painfully slow.
You would expect them to say painstakingly careful or something like that. Yeah.
Even if you want to forgive painfully slow, what about draconian?
Draconian's okay, I think, because that suggests very, very strict, doesn't it?
Not about fintech. Isn't like old world, they were draconian in the Middle Ages, right? Fintech is more new and modern, should be more efficient.
Well, in all fairness, Singapore has moved forward quite a lot, I think. So have you worked on some of these big applications by some of these big names? Have you worked on any of those? Without having to say any names.
Yes. I'd say we've been very fortunate. We have worked with a range of small applicants and some of the larger ones.
Right. And so when you're working with a big one, how extensive is the work that you have to do on that and they have to do as part of the application process?
Yeah, so what I'd say is it's great to be big because you have a lot of resources and you probably have a lot of team and to spend on the technology. And the MES says, this is fantastic. We can ask this client a lot of questions and have them do all this work to help us figure it out for the smaller cases. Yeah. So that's what I'd say is that when you're a big player, the MAS then expects a lot of details, legal opinions or summaries about how you treat your business. We'll ask you questions about your international operations that have nothing to do with Singapore, right? Mm-hmm. Just as kind of a learning experience. And as you saw, places like Coinbase, Gemini, OSL, they have not been approved yet. So it's not any key to going faster or anything. What I'd say is that the MAS kind of sees it as a higher profile licensee. And so is actually going to be more careful in a way to make sure that it's that there's no skeletons. And then they also use it as a tool for learning. And often, in fairness, they will have more complicated businesses, right? A big place might have a lot of different business lines, and that will take a while to digest. I mean, it's not like the smaller ones are traditionally moving that much faster either, right? By and large, everybody is on hold.
Yeah. And those big names which we were looking at, they're all pretty much exchanges. How does the MAS approach other types of virtual asset service providers like custodians and other service providers?
So Genesis, for example, is an OTC desk, right? And who are the others? I mean, some have unique models. Independent Reserve is an exchange. Custody is not actually regulated today in the Payment Services Act.
That's the same approach they're going to take in Hong Kong as well. They're not going to regulate custody for the time being.
So the MAS wants to regulate custody. That's under the Amendment Act, but it's not in place today. So as part of your licensing process, you do answer a bunch of questions about how your business will be sort of regulated going forward. The MAS does ask about custody specifically. And so we'll have questions about how you're going to hold the assets and who has title to them. But that's not really a business model that you can contrast in terms of the process right now, because everybody in the process either has to be an exchange or dealing. You might offer custody on the side, but if you do, that is not a regulated activity today.
So to be a licensed exchange in Singapore or regulated and approved, do you have to have all the structure in place, including all of your management? You can't just say, oh, well, I will do it when you give us the approval.
So there's sort of three buckets, although one is really historical. So all the exempt entities that were operating in January, right? They were grandfathered in.
Yeah.
And so you don't have to comply with the Payment Services Act, all the AML rules and certain things like the base capital till you get the license. But as part of the MAS giving you the license, they want to see you gradually get up to speed, right? In terms of where you are. And if they don't think you're ever going to get there, they're just going to reject your application. Then there are new applicants, and it depends on whether you have a track record in other jurisdictions or not. So if you have a track record in other jurisdictions and then you're launching operations in Singapore, you probably will want to have identified the CEO. You don't need to have an office yet, right? Because you may not be able to operate for 2 years. So there's certain things you can say, hey, we're going to do X, Y, and Z. But you also need to talk about how you understand the business. Like, hey, we understand how we're going to do wallet due diligence and how we're going to cover unhosted wallets and the things that you might need. And as part of the license application for everyone, you submit your AML policy and you submit your enterprise-wide risk assessment. And that's a risk assessment relating to AML CFT risks. So you have to have a certain level of sophistication about the business in order to submit the application. It requires financial projections, including, all the regulated activities that you're submitting an application for, and requires a business plan. So you don't have to incur that much in upfront costs where you have a bunch of staff waiting for 2 years doing nothing for the license, but you certainly have to have more than just an idea.
Yeah, no, but I mean, that all sounds like a reasonable balance to me. So the MAS personnel and officials, there must be a fair number of them are quite knowledgeable about crypto after all of these interaction. So it must be a pretty switched on regulator compared with some, would you say?
So I haven't dealt with that many other regulators, right? I've really been focused on Singapore, so I can't compare it. I think everybody has been learning. That's even among the lawyers in this space, right?
I'm learning every single day. Yeah.
I call myself an expert. I'm learning all the time, right? Both things can be true. And I think definitely the regulator has been, the MAS has been that way. I think they have learned a lot through the process. I think they know much more about what they want and what's important to them. I think it's tough to keep up with the technology, right? It's really hard. And especially as so much of it is technology based, like what does decentralized mean? When and even the businesses don't always know how to articulate it. So I think the MAS in Singapore is sophisticated. Having said that, blockchain is crazy tough to follow all the different innovations. And the business people can turn things in like a week and say, hey, here's our new model with the new twist now, and here's the wallet we're going to use. That's hard for everybody to keep up with.
Is there any interchange between the public and private sector with all the expertise that must be building up in the public sector?
Yes, there is. I mean, there's different nonprofit organizations that focus on blockchain and having a relationship with the MAS. And I think there is a high quality dialogue. And it's obviously not perfect, especially after the advertising guidelines went in. You have to think about, so all these businesses were promoting cryptocurrency and really trying to encourage greater adoption. And then without any consultation, the MAS said, hey, it's entirely inappropriate to publicize these businesses to the general public.
Victim of their own success with that great Matt Damon affair, weren't they?
Yeah, for sure. And Matt Damon particularly responsible, but it wasn't just limited to that. The MAS didn't just say, hey, no celebrities in your advertising. No. And so it's that kind of sweeping restrictions that I think then said, all right, well, how does Singapore feel about the industry, right? And I think that has affected the mood versus where we were in December, January.
Yeah, I mean, even back in 2018, the Hong Kong regulator was saying we don't like advertising to the public and we're watching out for push advertising on Facebook. And so we were always telling people from back then, don't advertise to the public in Hong Kong. That's going to be a real red flag, even with ICOs back then.
So I think from my own perspective, one way to address the view that crypto is risky for retail is to have a suitability test, right? So you make sure that before you let retail on board and trade, they only trade a certain portion of their total assets, right? And they have a certain sophistication. From my US background, I like the idea that companies can advertise their business, they can market it, but we still protect the investor by making sure that they're suitable and they're not going to get swept away and then they have a free choice. By disallowing all advertising, even if somebody said, hey, I'm going to make sure it's responsible and it's all just in proper text with a disclaimer, even that's not good enough. I struggle with that myself.
That can arguably be reducing choice, can't it?
Yep.
Yeah. I think there's a strong argument about that. Yeah. So in terms of different kinds of products, what about how does Singapore differentiate between securities and straight virtual assets? How does Singapore deal with NFTs, security tokens? What's your approach to all of that?
Yes, I think I've said there's like 3 or 4 different types of tokens at least, but it kind of keeps changing. So digital payment tokens like Bitcoin, Ripple, Polkadot, Ethereum, those are digital payment tokens. You should feel comfortable that they're in that zone. E-money, like stable coins, now digital payment tokens. You can have in-game assets, which are not digital payment tokens. Anything within a limited ecosystem or not. NFTs are not digital payment tokens unless they have really unusual attributes where they're deemed to be a medium of exchange. But if you put a monkey on a digital code and that's transferable, that you should assume is Singapore is nothing but a collectible. You still have to market it responsibly. It can still be used by bad actors, and you may want to file a suspicious transaction report if you think something's gone awry, but that's not a digital payment token. So then we go to security tokens, right, which will be regulated as capital markets products under the Singapore regime. And capital markets has been a regulated activity forever. So there are digital asset exchanges that focus on security tokens, and I think they're usually limited to accredited investors right now. And as much as anything, it's like a proof of concept, right? I don't think the market is gigantic yet. Maybe it'll get there. Maybe there are efficiencies to have all these tokens transferable on the blockchain. So I think there are a lot of people that are passionate about it, and there are definitely businesses that are doing it in Singapore. But the market is not the wide retail market. It's more of a niche market right now, and it's just a question of how much it's going to grow. And the regulation is just like any other capital markets product, except for special nuances driven by the blockchain technology.
So would an NFT exchange that only traded NFTs, would that need to be licensed in Singapore or not?
Absolutely not. I say that with confidence, right? So it all depends on the fine details, but in theory, that should be just like a shoe store, right? Because NFTs are not a digital payment token and they're not a security. Now, if the NFT collection offered some sort of revenue sharing as a result of the issuer, so all the people who held the tokens get a percentage of the profits, that might be different. But just a collectible, like a baseball card NFT or an image or a piece of music, something like that. If somebody tells me about that business, I tell them not to worry about the Payment Services Act. You do need to worry about if these are being used by bad actors and they are likely to be something that facilitates money laundering or terrorist financing. And then we have a broader question about what kind of company do you want to be? What kind of scrutiny will you be under if you don't undertake certain KYC procedures?
Yeah. I appreciate that you mainly focus on Singapore, but I just wondered if you had any comments you could make about other jurisdictions which have adopted a similar approach to Singapore, where they've actually got regulation and laws relating to crypto and how Singapore compares. I mean, I think of places like Gibraltar, Bermuda, Cayman, that type of place. I just wonder if you've had any occasion to do any sort of rough comparisons.
Here's a true story, and this is not really an academic answer, but it's sort of the way I take this question. We had a Singapore-based business, but their token issuer was in the Cayman Islands. So the VASP law came in and we said, all right, we have to register as a VASP. And we spent like a week trying to do that. We could not get through the whole application because there was some sort of missing piece of information that we did not have. We wrote SEMA, the Cayman Island Monetary Authority. They never came back to us, like ever. Because we said, hey, we want to register by the deadline, but we weren't able to complete it. What do we do now, et cetera. And so I think some of these smaller countries, even though they have a regulation and a process, they are still so early in figuring out what it really means. And they are just trying to check a box almost for the Financial Action Task Force. Now, Switzerland, Hong Kong, other jurisdictions, I think, are more sophisticated. Dubai is really interesting because certainly the first half of this year, a lot of businesses were going there, and the regulator was making a big push to be very friendly there, and Binance was doing all sorts of promotion to have their headquarters there. At least from a Singapore perspective, Dubai was where Three Arrows said it was leaving. They said, we've had enough with Singapore, we're going to Dubai. And then Three Arrows implodes. That makes you think, hey, maybe Singapore had a very prudent actually regulation, and it was going to catch these things, and that's what we want. So I can't speak to the overall regime of these countries. What I do talk about is asking businesses what is important to them in terms of where they want to be based and the regulation they want to base. Singapore makes a lot of sense to me as a forward-looking jurisdiction with a very good reputation on AML CFT issues, right? So that's all positive and supportive of fintech, stable country for business. But certainly the long period of time for a license, the lack of comfort around more advanced business models involving DeFi or something like that, Singapore is not going to be great for you on that. So depending on what your priorities are, you may want to look at other countries that may be quicker to respond to your needs.
Yeah. So there's a regulatory arbitrage thing is always going to be there, I think. Yeah. So has the MAS taken much in the way of actual enforcement action against crypto operators?
There were, like in 2018 and 19, there were cases of like exchanges that they thought might be like an offering of securities or something like that. Since the Payment Services Act, I cannot think of any enforcement cases. Binance did go on the investor alert list, as did another company called Defiance Capital. That doesn't really mean you did anything wrong necessarily. That means the MAS thinks there's been confusion about whether you're a regulated entity, and so they put you on that list.
Unfortunately for that entity, it's quite drastic, isn't it, to be on that list?
It's not a good fact. It's not a good fact, and it has like a bad, connotation, if you will.
Yes.
So there haven't been there have been some private actors, like actually people who have been arrested for helping transfer money, doing money transfer, but that's not crypto specific. That's under the Payment Services Act.
Yeah. So has Singapore been involved in any sort of moves towards doing crypto ETFs? I haven't seen any, but there have been some in North America.
I haven't seen any either. That would be caught up in the security token. Well, if you had like an ETF, like the Grayscale ETF or something that's investing in Bitcoin. Yeah, I haven't seen or heard about that. There's basically too much in the crypto space to keep track of, and I've left that to the bigger financial institutions.
So how does Singapore approach tax in relation to crypto?
Yeah, so there's a few perspectives on that. These crypto exchanges have to pay tax on their profits, right? That's just all there is to it. You can offset your costs and stuff like that, but it's just a regular business. On an ICO, I understand that in general, the sale of the tokens, even if they're for a service to be provided by at a later date, that is deemed taxable revenue at the time that you sell the token. And so the corporate tax rate would be 17%. So that's why I have seen a lot of token issuers move out of Singapore, right, into Panama or some other jurisdiction.
But how about the holding of tokens by individuals or any type of crypto asset by individuals, by companies? How is that taxed in the hands of the investors or holders?
Yeah, there are these questions about whether you're doing a trading business or it's just a natural gain, for example, and that's a detailed tax question. So they have all these badges of trade, and if you're engaged in a trading business, then any profit or loss you get on trading, that would be taxable. If it's a proper, just appreciation and it's deemed as a capital investment, then, Singapore does not have a capital gains tax.
Right. So is it clear, do you think, to everybody how that works?
Clear is too strong. I mean, there's plenty of intelligence out there, and you can do the research and everything else. And I think it's sort of customized to your particular business or question. So if you're an individual who's buying and selling Bitcoin and Ethereum and you're worried about your tax, I think we can figure out that pretty quickly. But if you're doing something slightly beyond it, where you're offering a service or actively trading on some sort of swap service, that might be deemed a business, right? In which case that's taxable. So as always, the lawyers are going to hedge and say, it depends on the facts and circumstances. Tell us more about what you're doing. And then you get this question of where you're doing it, by the way. So, I think that's another big question, especially for DeFi protocols. Just trying to figure out where they are is hard.
And what about asset management on crypto? You mentioned 3 Arrows quite a lot, but what's the approach of the MAS to asset managers?
So the MAS actually recently did a survey to existing asset managers, asking them about what their strategies are relating to digital assets. And I think the general understanding is that the MAS will allow regulated fund managers, so licensed or registered fund managers, to have a portion of their assets under management in cryptocurrencies. But when I say a portion, I think they're expecting a relatively minor portion, and the majority of it has to be investments into capital markets products. So I'd say something around 10 to 20% might be something that the MAS could be comfortable with. I haven't seen anything in excess of 20% that would work. This is not a rule I can point to on the MAS website. That's just my intelligence on it. The other thing I'd say is if you were doing a pure cryptocurrency fund and you limited it to accredited investors, there's a way you could do it that doesn't require any MAS regulation at all. So the MAS did not intend to regulate real property funds, for example, and there's this something called the non-capital markets product exemption. So there's an analogy from real property to cryptocurrencies, which are also not a capital markets product. And if that is the underlying product of the collective investment scheme, then you're just exempt from MAS regulations so long as you're only dealing with accredited and institutional investors.
Right, but presumably the actual placing of the fund would involve some kind of requirement for a license, would it, or not? If it was if it was done by an intermediary, as opposed
that's
to
like the prospectus exemptions and everything else. That'll depend on where you offer it in any jurisdiction. I was thinking more about the manager side of it. But yeah, there's offering regulations to consider for.
I just wonder if the MAS looks at its licensed intermediaries and says, right, if you're doing crypto or virtual asset work, we're actually going to look at that quite carefully and see what you're doing in that regard. Do they take that approach?
So what I'd say is this: if you have a pure crypto fund, I think the bias is that you are not going to be able to be licensed by the MAS, right? So it's only if you want to have a minor part of your strategy in cryptocurrencies that this is going to work, a minor part of assets under management. If it's the majority, then you have to look at another jurisdiction for the fund manager, right? Or rely on the non-capital markets product exemption. I think the MAS, because of 3 Arrows and the way certain things can be structured, I think the MAS is continuing to rethink how they are looking at the percentage of assets under management and what type of crypto derivative might constitute a capital markets product that they even want to be careful about too. So there's a lot going on in this space right this minute. I'd say if I was trying to take away something is like 10 to 20%, I could probably launch something in Singapore and go to the MAS on that basis. Anything more is probably going to be difficult.
So what happened about Bored Ape NFTs? Was there something about banning them?
I have not heard anything about banning a Bored Ape NFT. I did hear about the Singapore court enforcing an injunction against someone who had sold a Bored Ape to someone inadvertently, like there was a misclick or something like that. They accepted an offer that they shouldn't have, and they felt like it was fraudulent, and they got the Singapore court to put an injunction against this wallet address. Now, who this wallet person is, whether the court is going to be able to, enforce against this person, I don't know. But that is the one case I remember involving an NFT.
It's more transactional than anything to do with the Bored Ape.
Yes, that's what I'd say.
I see, right. So just looking forward, Chris, I mean, to me as an outsider, I think Singapore, apart from all the frustrations of actually dealing with everything day to day and not being able to get all your clients licensed in the way that you would like as quickly as possible, it does seem like Singapore has made a lot of progress compared with other jurisdictions. But what would you see as the ideal way forward over the next 5 years if you could actually contribute to the legislation and the approach and so on, which could be taken in Singapore?
Well, a few things. First of all, very pro Singapore. I've lived here a long time. It's a great country. And I think by and large, the regulators trying to do the right thing. I'd say, one, we shouldn't go over the top on passing new laws, especially in light of all this market upheaval. I would say that to some extent, we want to make our existing laws work the best and process the existing stuff correctly, right? And manage the people who are in the ecosystem now and make sure they're doing proper risk management. Honestly, a lot of the implosions in the cryptocurrency space have nothing to do with blockchain technology. They have to do with leverage. And so maybe we should be sort of examining how much leverage these businesses are taking on. And one thing the Payment Services Act does not have right now is a risk-based capital requirement. So they have a base capital requirement that you have to stay above X, but they don't talk about what other risk you might have that'll cause a quick implosion. And I think if we avoided that, we would solve a lot of the systemic issues. Then to me, the priority is processing the backlog of applications and getting those resolved one way or the other over implementing new regulation, whether it be the Amendment Act or any new regulation that might come out of the Green Shoot seminar. If I was to design it, I'd say, let's finish up what we've done, get to a spot, and then absorb everything in the world. That's what I would sort of take this moment to do, because clearly crypto, we are in the winter and there have been some blows, there have been some bad actors. I don't want to get into the specifics, but you can really go through some of the cases and see a lot of things that were done inappropriately and a lot of statements, bullish statements about the market that were over the top and misled people. So I do think we should take a pause and take it more seriously, but I think it can be done under our existing regulatory framework and laws. What I don't think is going to be helpful is, a lot of lawyers and compliance people are already struggling to understand how to make everything in the current framework work, and to add something new, I think is going to be hard. That still might be what happens, but if it was me, I would kind of approach it on a lighter touch for new laws for now.
Yeah, because I think as you just said, a lot of the additional processes and requirements on risk, they don't actually need new legislation, do they? They could simply be enhanced risk, which would be required as part of the regulatory monitoring process.
I mean, yes, that you could even fit it under fit and proper, right?
Yeah,
you could say
exactly.
any business that's fit and proper is going to do some quantitative analysis on their risk exposure and hold certain assets, protect customers to ensure that all these withdrawals will be processed. You could put that out, I think, as easily as you can do the advertising guidelines, and that would solve, I'd say, some of the biggest things. The thing I care about most, AML and CFT obviously is very important, but that's not what's gone badly the last 6 months. What's gone badly the last 6 months is this over leverage. And I think there's a way to solve that without creating a bunch of new laws.
I think so too, yeah. So you could actually deal with everything by perhaps limiting futures, derivatives, leveraging, do you think?
So the MAS doesn't want to regulate derivatives of cryptocurrencies at all, right? So that's one thing. If you have a derivatives business that is not regulated by the MAS, then they also feel that's completely inappropriate for retail. And if you have a business that involves dealing in digital payment tokens and derivatives, it basically needs to be done by separate entities. I think separate to the derivatives is the lending business, where you take people's money and you offer an interest rate and you can do anything you want with those assets when you have them. And that kind of leverage, and then the market moves against you, I think that's pretty scary. And I do feel bad for customers of these payment services businesses, right? So these are not funds. These are now payment services businesses that people think are like, all right, these are my assets and I'm getting return. I mean, worst case, I'll get my assets back at whatever the reduced value is. But that's not what's happening with these businesses that see stop withdrawals. So that's what I would be focusing on.
Right. And what about, these various exchanges where they've actually had to close and stop withdrawals? Any other way to deal with that, do you think?
I mean, what I'd focus on is less, obviously you want those people to have a appropriate either wind down or restructuring or whatever it is. So maybe the bankruptcy courts that solve that, or if you're regulated by the MAS, there might be some supervision relating to the wind down. I'd focus on any other companies that may be struggling right now that haven't gotten to that point.
So prevention rather than letting them get there. Right?
Well, I mean, there's only so much that can be done. A lot of the implosion has already happened and there may be cash burn and everything else, right? But if I was in charge of where to focus the problem, there's only so much I can do about the Celsius of the world that's already in bankruptcy. There's nothing the MAS can do about that. And Celsius was not based in Singapore anyway. But I'd want to make sure all my current companies operating, what is their financial strength position? Is there going to be an implosion? Let's get these answers out to the MAS, because then if they haven't been honest with the MAS, there can be some serious repercussions about that, right? And if they are having problems, the MAS can then quickly get involved and say, all right, this is where our position, this is what we need to do to get out of this. You're not going to get a license. You need to cut all the losses now. We can have a little bit more governance on that front. It's fine for the MAS to ask for the information, right? And if the businesses are not strong enough, well, financial strength is one of the criteria the MAS looks at when it licenses someone. So that's what I would be focusing on.
I guess someone like Luna, which I appreciate, I think wasn't Singapore licensed, but that would have needed the most enormous amount of liquidity to keep that going in the circumstances, wouldn't it?
Yeah, Luna is a complicated case. So it's the nonprofit Luna Foundation Guard that's based in Singapore, and I guess they issued the token. I have not done the deep analysis about where the Terra Station platform where that was based or anything else. So I don't hold the MAS accountable in any way for Luna Foundation Guard. Now, if there were statements that were inappropriate by Terra and they did not market that responsibly, then I think there's a question for the government prosecutors generally in terms of basic fraud principles, but that wouldn't necessarily be under the MAS.
Right. Well, this is so fascinating, Chris. Thank you. We could carry on talking for a long time, and we've already been talking for over an hour. So thank you so much again for joining me today. It was a really fascinating discussion about Singapore and obviously the great possibilities that Singapore has for the future. I really hope it continues to go well, both for Singapore as a jurisdiction and for you as well, with all the great work you're doing, bringing compliance and enablement to the crypto industry in Singapore. I think there was so much to learn for everybody, and your presentation was great for anybody who may be thinking of looking at Singapore for licensing. And I'd like to thank everybody who's joined us today. So we look forward to seeing you again. And I hope, Chris, that you and I can connect again in a few months' time to see where Singapore has moved forward to in the crypto space. Thanks, everybody. Bye. Bye.